that?
Well, there's a lot that can be done, but nothing that anyone wants to do. In fact, you could have gone back even further and avoided the 2008 crisis. This is the next one would be really the third in the sequence. The first one is 1998. That was started in 1997 with the Asian financial crisis. Sort of calmed down in the winter, spread around the world, blew up with Russia in the summer of 1998, and then came home to roost at long-term capital management. That was the hedge fund.
Are you prepared for the next financial crisis? Do you know how to shield yourself from a financial crisis? According to Jim Rickards, a financial expert, investment advisor, and New York Times best-selling author, the global financial markets are being artificially inflated by various factors, and a devastating collapse is inevitable. Jim Rickards has revealed the hidden dangers that threaten our economic stability and the secrets of wealth preservation in the coming financial crisis. In this video, I will reveal Rickards' main arguments on the financial crisis and evaluate his secrets on how to protect one's assets from the looming disaster. Stay tuned.
Okay.
So, Jim Rickards is a critic of behavioral economics, which is a branch of economics that studies how psychological factors influence human decision-making. Jim argues that behavioral economists have been manipulating investors into investing more than they should, creating bubbles and distortions in the global financial markets. According to Rickards, behavioral economists use various tricks to prop up the market, such as presenting information in a way that influences how people perceive it. For example, telling investors that they are saving for retirement instead of investing for the future makes them more likely to invest. Also, subtly influencing people's choices by changing the default option or the order of presentation. For example, automatically enrolling employees in a 401k plan unless they opt out increases their participation rate. That's not all. Jim argues that making people follow the behavior of others, especially in uncertain situations, is also a manipulation of behavioral economics. For example, showing investors that others are buying a certain stock makes them more likely to buy it and inflate the asset. Rickards claims that these tricks are unethical and dangerous as they inflate asset prices to unsustainable levels and create a false sense of confidence and complacency among investors. He warns that when the market eventually corrects itself, the investors who behavioral economists have fooled will suffer huge losses and possibly trigger a systemic crisis. So, now that we've known how behavioral economics works to manipulate investors, causing a crisis in the end, what does Jim think about the global economy now? Hold on, before we continue, this channel creates content on things companies don't want you to see, technology, videos inspired by the stock and crypto market, and expert ideas of the global economy. So, if technology and the stock market are something you are excited about, kindly subscribe to the channel and turn on notifications.
Don't forget to like, comment, and subscribe.
Jim Rickards has a pessimistic view of the current global economy, which he believes is heading toward a significant collapse due to excessive debt, inflation, and political instability. Jim doesn't just see a collapse, but he sees a collapse similar to the 2008 financial crisis.
The two questions I'm asked most frequently, because I'll describe the systems analysis and the complexity and how things actually work and why they're leading to a new crisis, and people will listen and say, well, that's all.
Rickards argues that global debt levels have reached unsustainable levels, especially after the pandemic stimulus measures. He estimates that the total global debt is about $280 trillion, which is about 350% of the global GDP. He warns that this debt burden will, even though it didn't trigger a default due to the Treasury Department raising the debt ceiling, will have severe consequences for the financial system and the economy in the future. Jim Rickards also argues that inflation is already surging in many parts of the world, driven by supply chain disruptions, energy shortages, money printing, and fiscal deficits. He predicts that inflation will continue to rise and erode the purchasing power of consumers and investors. He also warns that inflation will eventually lead to deflation, as consumer spending will collapse due to higher taxes, excessive debt, and increased layoffs. Rickards argues that political instability is rising around the world, fueled by social unrest, geopolitical conflicts, and cyber attacks. He cites examples such as the trade war between China and Australia, the tensions between Russia and Ukraine, the protests in France and Hong Kong, and the ransomware attacks on critical infrastructure. Rickards believes these factors will combine to create a perfect storm that will sink the global economy and cause a worse crisis than the previous ones. Jim advises consumers and business owners to prepare for the coming collapse so they can shield themselves. But how? Let's find out. Jim Rickards has a chilling warning for consumers and business owners. The collapse is coming, and it will be devastating. He urges everyone to take action now and diversify their portfolio before it's too late. But that's not enough. Rickards reveals the secrets of how to survive and thrive in the post-collapse world. He tells investors how to slash their debt, find hidden gems in the market, and adapt to any scenario. How does he know? Let me show you. So, Rickards argues that diversifying one's portfolio across different asset classes, such as stocks, bonds, and cash, can reduce the risk and volatility of one's investments and increase the chances of survival in a crisis. He recommends allocating at least a portion of one's portfolio to gold as a hedge against inflation, deflation, and currency devaluation. Also, Rickards argues that debt and derivatives are dangerous instruments that can amplify losses and create liquidity problems in a crisis. He warns that excessive debt levels can trigger a default or a restructuring, which can have severe consequences for the financial system and the economy. Rickards argues that being flexible and adaptive to changing market conditions and geopolitical events is essential for surviving a crisis. He advises investors to monitor the market signals and indicators, such as interest rates, exchange rates, inflation rates, gold prices, etc., and adjust their portfolios accordingly. He also advises investors to be prepared for unexpected shocks and scenarios, such as cyber attacks, pandemics, wars, etc., and to have contingency plans in place. Lastly, Rickards argues that undervalued and uncorrelated assets are a good way of shielding against a crisis. He claims that these assets can offer higher returns and lower risks than the overvalued and correlated assets that are popular among investors. Do you have the money you want to invest to shield yourself from the looming financial crisis? Do you want to diversify your portfolio but don't know how? Don't worry, because in our recent video, Robert Kiyosaki reveals the greatest investment of our time. So, check it out.